This is Scott Becker with the Becker Business and Becker Private Equity Podcast. Today, we're going to talk to Holly Buckley, the chair of healthcare at McGuireWoods, and talk about a strategic view of the healthcare and private equity business. So, a strategic view of healthcare and private equity. Holly, I'm going to ask you four or so questions. We'll just try and get you to give us relatively brief answers on each one of them. When you look across healthcare today, health systems, physician groups, PE platforms, what are the themes or pressures that you feel are most defining as we head into 2026?
Yeah, I think one of the core themes that I'm hearing a lot is just really increased margin pressure, as reimbursement pressures through Medicaid and other reimbursement continue to put downward pressure on providers. There's a lot of other expense pressures. And I think providers are really having to watch margins very, very closely. And that's always true in healthcare, but it feels more so the case across the board now than it has in a long time. And so I think that's one. I think we've seen less discussion this year than, last year and the prior year on labor costs, but I think that's still a very real concern, but I think it feels less pointed than it has in past years.
Yes, and you spend a lot of time, and right, I think I could not agree more in terms of margin pressure being a key issue for everybody, whether PE, investing in healthcare, health systems, physician groups, and across the board. And we hear that constantly. I think that's right on. You work with a lot of leadership teams, both leading organizations, navigating today's challenges. When you think about the best leaders, the best that you work with, talk a little bit about what do you see the best leaders doing in this environment?
Yeah, I think it is that the best lead, and this is going to sound really kind of Captain Obvious, but it's really that people are doing things very deliberately as opposed to kind of cobbling things together. I think having real strategy and vision for what the business needs to be doing and then executing on it. I think, and again, I said it was a Captain Obvious comment, but it really is true. I think if we look 5 years ago, the macro environment was very different, such that just a pure consolidation strategy seemed to work out pretty well for many. And that's just not enough now. It really needs to be more of a strategy around what do we do well? How do we focus on that? How are we going to grow? How are we going to build infrastructure? And how are we going to make our business a best-in-class business? And those folks are winning and surviving and doing well. And the folks that don't execute on core strategy and essentially know what they're doing are the ones where things seem to be falling apart more.
Thank you. And how much is it not taking big risk, investing in people? What do you see out there that's working with certain teams versus other teams?
I'm not seeing folks taking really big risks necessarily. It's more executing on core strategy and the blocking and tackling on a day-by-day basis that I'm seeing work really well. It's every day figuring out what are we doing well and how do we capitalize on that, and continue moving in the right direction. I frankly, across the board, am not seeing a lot of big risks being taken. It's more the deliberate step-by-step that I'm seeing prevail.
Thank you. No, and I love that. Regulation, reimbursement, what trends are you watching, and what are operators and investors thinking about now from a regulation and reimbursement standpoint?
Yeah, I would say on the regulation front, it continues to be a lot of these state laws, and we've seen a slowdown on the amount of new laws being enacted, but they really are having a much more real impact on transaction. I'd say not execution, but on timelines. And so more and more states now have their pre-transaction filing notices, and they're really, really broad. And the dollar thresholds for many of them are either non-existent or very low. So unlike the federal HSR law, the state laws can pick up much smaller transactions, and we're seeing investors not go into certain states where those laws are very stringent and impose very long timelines. And even with the thought of, even though it's relatively bad right now, it may be navigable, but maybe when we come to exit, it's going to be even worse because the state's just very active in terms of legislation. And so we are seeing a lot more thought and planning going into deals because of these laws. The most recent was the California laws, and they were a lot more mild than the proposed law from last year, but they essentially codified certain corporate practice of medicine and dentistry laws, but also expanded the pre-closing notice of material change transactions. And so we're having a lot of discussions on those with clients as they look at new investments and where they may seek to grow to see if they're going to be viable with these laws, which is just something that 2-3 years ago was not really on most folks' radar.
No, literally fascinating. And Holly, when you look at next year, what are you most focused on and excited about as you start moving towards next year?
Oh, well, in terms of market segments, it has to be AI, and it's still early stages, and there's a lot of startups that are kind of a little bit smaller than we often deal with, but kind of the impact of AI on healthcare, whether it's delivery or back office, we're going to see more and more AI-enabled solutions that are trading, and so that's going to be a super interesting area. There's a few other segments that I think we're going to continue to see a fair amount of growth and action in, such as longevity medicine, along with kind of concierge medicine. They often go hand in hand. I personally think it's super interesting and fun, but it's still in its infancy from a kind of deal perspective, along with women's health and men's health, which can kind of fall into the same types of practices and investments. But I think not huge deal flow, but huge interest and discussion around them. We continue to see massive amounts of activity in areas like home health and hospice and even dental, which are less exciting, but still good staples. And then outside of kind of investment, kind of going back to AI, just the changes in the legal industry with AI and how that's changing day-to-day life and practice and the client experience is going to be an area that we're thinking a lot about next year and really looking to capitalize on.
Thank you very, very much. And do you expect a busy deal year next year in the private equity healthcare sector?
I do. I think that, for the last several years, you've been asking me that same question of what do you see as the outlook? And it's been like, it's going to get busy. It's going to get busy. And then I'd say as of July this year, a switch kind of flipped and we really did get busier. And it's been consistently busy since kind of middle of the year this year, but we're continuing to see a good amount of incoming LOIs and processes kicking off, such that I believe the pipeline is going to be pretty strong next year. And we all know there's a huge amount of dry powder still out there, and funds holding companies are really at a spot now where they need to trade. And so I do anticipate that 2026 is going to be not kind of a gangbusters year, but I'd say a really robust deal-making year.
Thank you very, very much. Holly Buckley, Chair of Healthcare at McGuireWoods. We appreciate you so much, as always, joining us on the Becker Private Equity and Business Podcast.
Thank you.